It's been in decline for most of this year, but are we finally seeing fortunes trading for the price of natural gas? The story for much of this year has been one of steady decline, but we are seeing some real strength coming in over the last 6 weeks. And I think it makes it really interesting for the rest of the year to see whether this is a new uptrend. We're going to jump on the chart in a minute, then I'll come back and talk about what's behind this in a bit more detail. Then we'll go back and place the trade. Don't forget, if you're watching this, if you subscribe, support the channel, we'll continue to push out content like this. But first of all, let's just catch up quickly with what's been going on with the natural gas price and why I think we are set for an interesting finish to the year. So let's take a quick look at what's been going on with natural gas recently. Then we'll come back and look at this in a bit more detail when I've talked a bit more about the fundamentals behind it and the big levels to watch. So we had this massive explosion in volatility about 11 months ago in natural gas, and since then it's just been selling off, gave back all of those gains really quickly, almost as quickly as it moved higher. And since then we've seen the price drift off. But what I think is interesting is what we've seen going on over the last few months. So I'm just wondering if this run of strength we've seen in August and into September is finally natural gas shaking off this weakness, and we could be about to start a fresh recovery. We're going to come back and look at this in a bit more detail, set up a trade for October. But first of all, let me talk a bit more about natural gas and the big levels to watch. We're going to go back on the chart in a minute, look at things in a lot more detail and place our trade. But let's talk about the last 12 months or so. We saw that massive surge towards the end of last year that caught many people by surprise. And that was really due to low storage levels. There was concern that there could be supply issues. Those faded quickly, as we could see. And the story for much of this year has been the same as the last couple of years. We're seeing record levels of production for natural gas, so there doesn't appear to be a problem with supply. Over the years, supply has risen faster than demand. That's one reason we've seen the price be suppressed, but we're getting into the time of the year when demand increases. Maybe we are due some surprises. Maybe the price has been pushed down too far. Before we jump back on the chart and take a look at it in a lot more detail, let me just look at the big levels to watch out for. So on the upside, I think the immediate levels, 275, 264, those were the highs seen through September. I think if we can break through here, it looks like we're set for, I think, another leg higher in this uptrend. On the downside for me, it all starts from 2 psychological level all the way through to 229, the most recent low for the 3rd of October. These levels are really important for the trade this month. So let's get back onto it. Let's place the trade in natural gas for October. Let's just start off by looking at the bigger picture. So for much of recent history, so 2017 through to September, October 2018, the natural gas price had been pretty flat. We'd had low volatility, just trading, drifting slightly lower, but in a wide sideways range. Then we had this massive explosion in volatility last year that caught a lot of people the wrong way around in this market. A lot of pain, I think, for people who've been doing things such as selling options to try and capitalize on the lack of volatility. But since then, you can see those gains were given up and we've traded off back to where we are now. Let's look at this in a bit more detail. So why I think it's interesting what's going on now. We've seen the price since January this year. So the highs back in mid-Jan, Jan 2019, up above 3.4. And we've seen the price under pressure all this year, right into August, right into those August lows. And in August, the market traded as low as just above 2. And since then, we have seen a much more sustainable rally. We've got used to seeing rallies in natural gas over the last 12 months, only for them to peter out. So the sellers will come back in. The trend line did a great job of holding any strength. I've got a 20-day moving average on here. It never spent that much time above that 20-day moving average before giving up the gains and moving lower. But this latest move does look different. We've punched out on this latest move during September. We've punched out through those July highs. We've had a look at pushing higher through the May highs. The price has given up those gains since, but I think for the first time, it starts to look that maybe natural gas is breaking out of this downtrend it's been in for pretty much all of 2019. So it makes it, for me, a really interesting market for the rest of this year and going into next year. So this is where we are in this new trend that started on the 5th of August, just above 2, and the price rallying up. You can see here, mid-September, up towards what, 2.74. It's given it up since then, but that trend line is holding. You can see the latest test of that trend line. We saw a sharp reversal. Okay, it's only in the last few days, but I do wonder, is this the end of this correction since those September highs? And we're going to see the market push higher. So for me, the trading opportunity here is to look to buy in to this new trend, to see if we can build a more sustainable recovery. Perhaps the more cautious here would want to wait for that 20-day moving average to be broken, currently coming in around about 2.5. But for me, I'm going to place the trade now. Looking at the RSI, we've got a 10-day RSI. This is the most oversold we've been on the RSI. We've got to go back to pretty much to the end of July 2019. So we're at what, 2-3 month oversold level on the RSI. And the only question is, well, where does your stop go? I think the most aggressive place for a stop, and it would be aggressive, would be below those most recent lows. So those October the 3rd lows, just below 2.3. I'm going to give the market a bit more wiggle room, quite a bit more wiggle room actually, and I'm going to place it back below the lows. They're only from about, what, 6 weeks ago, but back below those sort of 2.13 lows, that sort of area. That's where my stop's going to go. Before we get the trade on, let's just look at this correction here from those September highs in a bit more detail. So I flipped this to an hourly chart just to pick up on that slide from above 2.7 to where we are now. And you can see, again on the hourlies, trendline's done a good job of holding any recoveries. We had the first squeeze through October the 4th. So again, maybe the more patient trader would wait for that move, see if we get a move to 2.5 to really confirm this trend is over. But we only do these videos once a month, so I think it's trade or not trade. So we're going to get the trade on, but I think that's maybe the more disciplined approach here. So 2.5 in the short term, I think, is a good level to watch. But let's get our trade on. So I'm going to go top right, click on buy. So the first thing I'm going to put in is my stop loss. So about 213 was the low. Let's go 205 as a stop. So we'll go close at a loss. We'll put in 205 into there. Now, if I trade at the size my dealing ticket has defaulted to and buy now, my risk is £7,500 if I get stopped at 205. I don't want to risk £7,500. I want to risk more like £200 in this trade. Let's bump that size back down a bit. So I've changed the size to 670 in the dealing ticket. So if I'm a buyer, 670 where it's trading now with a stop at 205, then my risk is just under £200, which is a much more sensible level of risk for the size of this account. You can see on the chart now it's showing me where the potential new position is going to go in. So let's just click on buy. We're ready to go. We'll place the trade. So there's the normal confirmation, bottom left, buying 670 natural gas at 241.9. My trade is open. Again, going back to the chart, I can see my open position and I can see the stop loss there showing on the trade. To track this in a bit more detail, let's just go to portfolio. We'll click on there. So we do have a bunch of trades on this account anyway, but here's the natural gas trade. So buying 670, 2419. The market, because of the spread, of course, is 2416. My stop is in at 205. If I change my mind, I can just come out of this position now. I can click on close and get rid of the trade. But I think it's a really interesting market, because we have seen this recovery off those lows. We've come back to the trend line. The market's turned around. The RSI is oversold down here. I think it's a really interesting position to run. So we'll come back to it and see how it does over the next few weeks. But it certainly looks a lot more positive than it has done in recent months. I think it's going to be a really interesting few weeks to see just how sustainable this recovery may or may not be. As usual, I should say, the trades we do, they are for educational purposes only. They're not financial advice, but I think it makes everything a lot more interesting if we put some money on the line. We'll start wrapping things up there as usual. To never miss out on the content we produce on all the different markets we look at, just make sure you're subscribed and click the alarm bell notification to get a message off YouTube whenever we upload new content. But for this quick update on natural gas, we'll leave it there. So from me, David Jones and Capital.com, good luck with your trading.
you.